If you don't want to stay average, financially stressed, and permanently dependent on a paycheck, you need to stop obsessing over millions and focus on one number: $10,000. Not because $10,000 is life-changing wealth. It isn't. But because earning your first $10,000 through your own initiative rewires how you see money. It shifts you from consumer to producer, from employee mindset to value creator. When I was starting out, I didn't aim for seven figures. That target is abstract and paralyzing. I focused on proving one thing: money is a skill. Once you earn your first meaningful amount independently, the psychology changes. You realize income isn't random, it's engineered. And once engineered once, it can be repeated, optimized, and scaled. If I had to start from zero today and rebuild to $10,000 as quickly and strategically as possible, I would not gamble on crypto, day trading, or speculative trends. Those require capital and luck. At zero, you don't multiply money, you generate it. Strip away the noise and you'll see four structural paths to early income: in-person services, local product sales, global products, and online services. Each has advantages, each has limitations. The key is understanding scalability and margin. In-person services are the fastest path to immediate cash. Personal training, car detailing, photography, lawn care, barbering. These businesses generate income the moment the job is complete. They require minimal startup capital. Skill plus execution equals payment. The downside is constraint. You are limited by geography and time. You can only serve one client per hour. Income ceiling arrives quickly unless you hire or expand. Local products, baked goods, handmade crafts, art, introduce inventory risk. Materials cost money. Demand fluctuates. Margins shrink when production time increases. You may enjoy the work, but emotional attachment doesn't increase scalability. Local markets cap upside. Global products change the equation. E-commerce, drop shipping, print on demand, brand creation. Suddenly your customer base expands beyond your city. But product businesses require reinvestment. Every sale ties up capital in restocking. Cash flow becomes cyclical. You often wait months before momentum builds. It can scale significantly, but it demands patience and disciplined reinvestment. If speed is the objective, online services dominate. Online services combine global reach with service-level margins. You are not limited to your town, and you are not constrained by physical inventory. Copywriting, video editing, paid ads management, social media strategy, web development, these require skill, not stock. Profit margins often exceed 70%. Payment arrives quickly. Overhead remains minimal. To reach $10,000 efficiently, skill alone isn't enough. You need structure. I think of it as four pillars: positioning, leverage, reach, and reliability. Positioning determines income velocity. Businesses pay for revenue generation, not aesthetic talent. Editing videos for hobby creators is different from editing content for entrepreneurs selling high-ticket products. Writing random blog posts is different from optimizing sales pages that convert traffic into revenue. If your work increases someone's bottom line, pricing power rises immediately. Leverage shifts you from hourly billing to value billing. When you charge per hour, your income ceiling is fixed. When you charge based on performance or deliverables tied to measurable outcomes, compensation expands. If your ad campaigns generate $50,000 in revenue, a $5,000 fee becomes rational. Businesses evaluate return, not effort. Reach eliminates constant chasing. Document your work publicly. Publish before and after examples. Break down strategy. Share insights. When your expertise is visible, clients approach you. Visibility builds inbound demand. Inbound demand strengthens negotiation power. Reliability compounds income. Most freelancers fail not from incompetence, but inconsistency. Missed deadlines destroy trust. Clear communication builds retention. Repeat clients eliminate acquisition costs. Organized systems outperform raw talent over time. Once that first $10,000 is earned, discipline becomes the next decision point. Income without allocation strategy dissolves. The wealthy do not treat income as spending power. They treat it as capital. Before investing aggressively, liquidity matters. A high-interest savings account, even at modest yield, provides optionality. Cash prevents forced liquidation during downturns. It absorbs shocks. Liquidity is defensive positioning, not performance chasing. Index funds introduce scalable compounding. Broad market exposure through low-cost ETFs captures economic growth without requiring constant monitoring. Over decades, disciplined contributions outperform sporadic speculation. The S&P 500 historically delivers strong long-term returns because it represents productive businesses generating profit and innovation. Individual stocks add concentration and volatility. They require research and emotional resilience. For smaller allocations, they teach financial literacy. But concentration risk increases. Exposure should match risk tolerance. Cryptocurrency represents asymmetric volatility. It can accelerate gains or amplify losses. If included, it belongs in a controlled allocation. Capital you can afford to lose without destabilizing your foundation. Speculation is acceptable only when core assets are secured. The sequence matters. Cash buffer, broad market exposure, selective higher risk positions, capital allocation without emotional impulse. But understand this, the first $10,000 is not about investment returns. It is about proving execution. It is about recognizing that income responds to value delivered. Once proven, the growth trajectory changes. The difference between rich and wealthy is allocation discipline. Rich people spend income. Wealthy people convert income into assets. Supercars, luxury clothes, status displays, these are consumption signals. Assets generate optionality. If you are at zero, your objective is not lifestyle. It is momentum. Build skill, monetize quickly, reinvest strategically. Avoid unnecessary complexity. Automate investing. Minimize fees. Let compounding perform its function. $10,000 is not a finish line. It is psychological evidence that the system works. If you're serious about building capital instead of chasing hype, subscribe to Capitro Mind. Comment below, I'm building assets. Your income is a tool. How you deploy it determines whether it becomes wealth or disappears into consumption.